73% of first-time homebuyers have regrets about their purchase. Not small regrets, financial ones, the kind that follow you for years. A national survey found that nearly half spent more than they planned. 22% wish they had understood repair costs before they bought. And buyers who felt rushed were nearly 3 times more likely to regret their decision. These are not random bad outcomes. They are the result of 7 specific mistakes. Mistakes that are completely avoidable with the right information going in. This video covers all 7, in the order they actually happened to you. Stay through the last one. It has the highest price tag and the least warning. The credit score you see in your banking app is not the score your lender will use. Most buyers find this out for the first time at their mortgage application, and by then, it is too late. So what is actually happening? Apps like Credit Karma use something called a Vantage score. Mortgage lenders use a completely different model called FICO. These models calculate differently, and the consumer score is almost always higher than what your lender will pull. Your interest rate is directly tied to your credit score. The difference between a 680 and a 720 can mean thousands of dollars over the life of your loan. And most buyers never check until they are already sitting across from a lender. Before you do anything else, pull your actual credit reports from all 3 bureaus. Look for errors. Look for collections. Look for anything dragging your score down that you can fix before you apply. Do not open new credit cards. Do not finance a car. Do not make large purchases while preparing to buy. Touring homes without a real pre-approval is one of the fastest ways to lose a house you actually want. Here's what a seller's agent sees when that offer comes in with only a pre-qualification letter. An unverified estimate, based on numbers the buyer typed into an online form. Nothing checked, nothing confirmed. In a competitive situation, that buyer loses, every time. Pre-approval is different. The lender has pulled your credit, verified your income with actual documents, reviewed your bank statements, and issued a written commitment for a specific loan amount. The confusion between these 2 words costs buyers real opportunities. They think they are ready, they are not. Get pre-approved before you look at a single house. It tells you exactly what you can actually afford, not what you think you can afford. Most first-time buyers plan their savings around one number, the monthly mortgage payment, and it is not even close to the full picture. Closing costs alone run 2 to 5% of the purchase price on top of the down payment. On a $350,000 home, that is another $7,000 to $17,000 due the day you sign. But that is just getting into the house. What surprises buyers even more is what comes after. A recent Bankrate study found that hidden homeownership costs average over $21,000 per year beyond the mortgage. Maintenance, repairs, insurance, systems that fail. 22% of first-time buyers said underestimating these costs was their biggest regret. That is the #1 regret, and it is entirely predictable. 38% of first-time buyers felt pressured to decide quickly, and those buyers were nearly 3 times more likely to regret their purchase. 3 times. You find a house you love. You imagine your life there. And then someone tells you there are other offers coming. That urgency is real sometimes, and manufactured other times. Buyers almost never know which one it is. When emotion drives the offer, buyers overbid, skip due diligence, and waive protections they do not fully understand. Know your walkaway number before you walk into a negotiation. If you feel rushed, slow down deliberately. A home that is right for you will survive one more day of thinking. There is no pass or fail in a home inspection. There is no such thing as a house that passed. A professional inspector will find things in every single house because every house has things. The report is an information document. What you do with that information is a negotiation. After inspection, you can ask the seller to repair specific items, ask for a credit and handle repairs yourself, accept the home as is if items are minor, or walk away and get your earnest money back within the contingency window. What kills deals is buyers who get a long inspection report, panic, and try to negotiate every single line item. Deals die over $400 in minor repairs. Identify the material items, the things that affect safety, structure, or major systems, negotiate those. Let the cosmetic stuff go. The inspection exists to protect you. Use it like a tool. Your offer got accepted, and your lender is still watching every move you make. Lenders re-verify your financial picture close to closing, sometimes just days before you sign. Finance a car and your debt-to-income ratio changes. Open a credit card and that is a new inquiry. Move money between accounts without documentation and underwriters flag it. Do not change jobs. Do not finance anything. Do not make large purchases. Do not move money without telling your lender first. Treat your finances as completely frozen from offer acceptance until you have the keys. This is the mistake with the highest price tag, and almost nobody warns you about it. During the competitive market of 2021 through 2023, buyers waived inspection, financing, and appraisal contingencies just to win. Some won houses. Some discovered major defects with zero legal recourse. Some forfeited their earnest money when financing fell through, often $5,000 to $10,000, gone. That market has shifted. Buyers have more leverage now. So why are people still waiving contingencies? Because the instinct is still there, and not everyone advising you has your best interests at heart. The inspection contingency lets you negotiate or walk away based on findings. The financing contingency protects your earnest money if your loan falls through. The appraisal contingency protects you if the home appraises below the purchase price. These are not obstacles to winning. They are the primary things standing between you and a very expensive mistake. 7 mistakes, every one of them avoidable. With the right information going in, that is the only reason this video exists. There is a free first-time buyer guide linked in the description. Covers everything we walk through today, completely free. If you want to talk through your specific situation, book a free 20-minute call using the link below. No pitch, just a conversation. Subscribe if this was useful. A lot more of this coming.